G'day, Rudy here. Welcome to this week's dividend video. Going to be some interesting opportunities in the oil plays this week. Overnight, Trump slapped some more tariffs on top of China's exports, as China is starting to ban rare earth stuff. Yeah. Interesting times. Alright, so just for clarification, all the div information I get from Morningstar, so in alphabetical order. So we start with ALX, Atlas Arteria, so the toll roads. Okay, so they've done the hard work and broken through the wedge, and they're just trading range bound. They just paid a 20-cent div, which was this candle. So they're now sort of sitting at support. If you were waiting for a bottom, you'd want to see, I guess, this type of action. Or if you love it, then buy it. Okay, next one. I'll just go to a monthly candle. That was weekly, because we're long term. Alright, so this is a new one. Acro. So this is given by Rob. Thanks. So Acro's in the integrated construction systems portfolio for formwork, scaffolding, industrial services in Australia and global. So Div 5.2. That's what we call a bit of a bull flag there. So that looks very nice. AGL. Okay, so AGL sort of trading in a range. So they're at 5.9. So that's, I don't think you're going to get much capital growth out of them. But a nice div. ANZ. So it'll be interesting to see what happens on, because the US, it was mainly the tech market that got whacked last night. That's still my preferred big bank to buy. APA, so the pipeline business, so they're on 6.4, looking very nice. Horizon, so rail freight operator, 4.9, just sneaking in on trying to find ones that are above 5. This one's actually in the MVR ETF. Okay, then we've got Bendigo Bank. So that's the 5%. That's the preferred smaller bank to buy. And we've got BFG. So they're sort of in that financial services space. Div 5.6. That's forming a long-term bullish pattern. Okay, so now we get into, we're not paying dividends here. So this is the natural gas price. I'll just go to a weekly chart so we can. So it's probably due to couldn't break there. See those candles there? Couldn't break above, so. The theory is, there's stuff coming from China to America, so less oil, well, natural gas attached to oil, prices down anyway. It looks like it's due to come down anyway, before Trump's talk. However, oil, we'll just go out to a monthly to get a bigger picture. So it looks like long term I'm very bullish on oil, but I think we've got a bit of pain to go. So oil's broken this sort of key support level here. So this is the tariff tantrums before. So it looks like we're going to come down and probably be a buying opportunity like it was before. So that's the market. So So why do I show oil now? Because the first one of our oil stocks, so Beach, so currently on 8%. So obviously, as you'd know, the share price goes down, the div will go up. Now they're interesting because they've been trading sideways a long time. I picked it a bit early back there. You get that. So 92 cents. So it's $1.12. So 92 cents is that support line there. But I wouldn't try to pick bottoms. If you're worried about prices, I'd be waiting for something like this, a bit of a green candle to occur. Anyway, we BWP, so they're a property trust, so no franking credits. So this is from Cynical. They're on 5.1. They've got warehouse, multi-good, retailing properties. Anyway, it's looking nice and stable. Dicadata, he's on 4.5, but I've kept him on there because he's a nice. Down here is like 5.5, 6. So it'll be interesting to see actually what happens with tech, because things like the batteries, China's on the big batteries putting controls on. They're sort of trying to say, sucked in, you Westerners, you decided to make all your stuff over here because we're cheaper. Well, now I'm not going to give it to you. What chance do you think Albo has of changing his mind? F4, I'd say. Anyway, that's where we are. DBI, so they're 5.3. So they're shipping capacity through the terminal there. So this was a Jimmy wreck. So that looks pretty stable. DRR, so that's the royalty company. This one's in the MVR ETF too. So they just collect a royalty off BHP's iron ore, 5.5. They just paid their div a couple of weeks ago. I'll go back to a monthly chart. So Elders, so they're on 4.9. Agricultural, so farmers, shop for the farmers. So they look like they're somewhere near a bottom. Fortescue, so they're on 7.3. Another one in the MVR ETF. Fleetwood. So this is a new one. So they're on 8.2. So they manufacture accommodation facilities for modular housing and villages, commercial stage with design, manufacturing and operations in Australia. Lucky they're not making them in China. Anyway, that looks pretty nice. GQG, no, I haven't. I talk about this every week, but I never have said buy it. 10% div though, but nah, not yet. They're a global fund manager, so wait for a bit more pain, I think. HDN, Homeco, so they're another like property trust, 6.2. Retail properties, like your neighbourhood retail shopping centres. Anyway, these things aren't going to shoot the lights out, but you're not looking for shoot the lights out growth, so keep an eye on that one. Okay, Horizon Oil, this is a new one, 14% div. So they're a mid-tier producer with Asian Pacific focus. They got some property over in China. Anyway, the oil price doesn't seem to affect them. Look at that. They look, yeah, they don't care what the oil price does. IVE. This one's from Billy. So these are another interesting one. So integrated marketing and visual communication solutions provider, specialising in large format digital printing, point of sale stuff, div of 6.7. So it's done the hard work, it's broken through, now just trying to find a bit of a bottom here. So if it does drop around here and start turning up, looks good. Chicken Man, so ING 7.2, not yet. It's trying. Look at that. It's trying its best to get above that support point here. So not yet. See if it can. It's doing the right things, but just see if it can get up a little bit more. IPH, so intellectual property, same sort of 9.1, same sort of story. They're right down at support here. So you can see they're trying to make a bottom. So soon it'd be pretty good. Perpetual. I think someone wants the note here. Oh yeah, the big cheese. So paying 5.7. So they're what's these notes? They've trimmed operations, pretty solid company. Finance trust management, yeah, that's the one. So declining channels are bullish when broken. So it's making the right moves. So that's nice. Add it to your portfolio. Jupiter Mines. So they've actually, them themselves don't do much. It's sort of a royalty, but it's not. They've got a 49% interest in South African manganese mine. And it's got some other stuff. It's paying a 6% div, but it's above resistance, so you'd have to give it a look. Lindsay Australia, so trucking, 7.8%. So it looks like they're trying to find a bottom in there. Macmillan and Shakespeare, salary packaging, government clients, all those lazy government people, 3 support staff for every whatever. 8.8 div. So that looks like that's bouncing off support there. Metcash, goes there 4.8, so not 5, but if they come down a bit, they'll get over 5. So they're just add to the watch list really. It's not a screaming buy yet. My State, this is a new one I've added. What are they? 5.1. So Tasmanian-based financial services company. So they look had a bit of punishment. Now they look like they're consolidating there. Okay, New Hope Coal. New Hope Corporation. So mainly coal miner. So they're like the coal price hasn't been smacked overnight. So at these levels, you'd think it'd be pretty safe long term, forming a bullish pattern. RFF, so Rural Funds Group. So they own a whole bunch, 6%, a whole bunch of agricultural assets. So they've done the hard work and now they're consolidating. Looks like pretty good support around this area. Then we got Resi Mac. Okay, so they're paying 6%. So the residential mortgage and asset finance lending portfolio in Australia and New Zealand. Maybe wait, so it's on 6. Looks like it's having a bit of a struggle with resistance here, so maybe a bit of a pullback. Keep an eye on it. It was a buy there. Rio, so 4.8. They're in the MVR as well. Copper got a little bit hit on Friday, but anyway, pullbacks. From a chart perspective, it's broken. Come back and retest is fine. Now this guy, he's been in the bad books a bit like some of those other ones, but he's 10.5 div now on Spark. It's like the Telstra of New Zealand. Made some really bad financial decisions, but right down at support here, and there's one of those declining channels which are bullish when broken. So you'd have to give that one a serious thought, I reckon. Okay, now on to Santos. So Santos divs now 5.5. I had a subscriber message me saying he's got a buy order in at $6. Well, why not? So that's a $6.50, $5.80, $1 on 6. What's that? 10. Push that up to 6.5ish. So yeah, but I think what you got to like, this is what happened last time. Got smacked. So like if you're trying to maximize your entry price, you just got to just let it blur and then wait for something like this to happen. That's about the only good news about it, really. Okay, then the King 7.2 at current prices. So his first line of defence is 22 flat. Then I'd say 21 flat. So I've put off doing oil. I did him a few weeks ago. As you know, reliable for the div, but they're the price levels to watch: 22 and 21 for Woodside. Okay, Treasury Wines. So they're still a no, 5.6. So they've broken support there. So they're in a bit of trouble. Although as I look at that, it's so yeah, it's still going to need. Usually it'll break and then come back and retest and then go. A bit like here, but it couldn't break there. Anyway, keep it on the radar, but not yet. Tower. So this is a new one, general insurance business. So 8% div. Anyway, it's consolidating here, so that looks pretty good. And then, there's not. So Waypoint 5.9, another property trust, service stations, probably at its high, so no rush into that. Right, so that's the last of the ASX stocks, and then in terms of ETFs, you've got VHY, which is so BHP, CBA, Westpac, NAB, Telstra, Woodside, Transurban, Rio. So it's got all your big boys in it. Now these, you look at the companies in there. So I keep saying they should make a dividend ETF out of the ones I just went through. So you're probably looking at 4s at best. I mean, Commonwealth Bank's at 3.0, I think. But anyway, it's diversified, and then SYI, it's another one. It's basically loaded up with banks, and then Telstra and Woodside, but they're very heavily weighted to the banks. And then lastly, the dividend king, dividend ETF king, WiMax. So there's 7.5%. But basically you miss out on the growth. The way they make their sort of extra money is through selling call options and collecting a premium. But in a rising share market, people exercise the options and they got to give them the shares. But they end up getting a higher div. You just don't get as much capital growth as holding the shares. Alright, that's your weekly dividend wrap. If you know of any other ones, please share us. See ya.